This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. The European Union carbon price hit a record high of above €50 per tonne on Tuesday, a key milestone in what analysts say is likely a long-term climb towards the price levels needed to trigger investments in innovative clean technologies. The EU carbon market is the bloc's main tool for curbing greenhouse gas emissions that cause climate change, forcing power plants, industry and airlines running flights within Europe to buy permits when they pollute. With the bloc striving to meet tougher climate goals, including a new target to cut net greenhouse gas emissions by at least 55% by 2030, the market has found more impetus.
India's oil imports in March rose from the previous month, buoyed by an upturn in economic activity that could take a knock again because of renewed lockdowns in the world's third-largest crude importer. Crude imports rose 7.3% from February to 18.26 million tons, data on the website of the Petroleum Planning and Analysis Cell, PPAC, showed, although imports were still down about 6.5% year-on-year. Louise Dixon, oil markets analyst at Rystad Energy, said the small slide in imports year-on-year in March could be attributed to a surge in crude prices.
Moving on to the top news in the energy sector.
Operators of U.S. Midwest refiners, including BP, Marathon Petroleum Corp. And Cenovus, are hiring lower-cost subcontractors to handle massive, months-long maintenance projects, setting aside long-time unionized workers, 6 sources familiar with the projects told Reuters. Refiners have sold assets and closed facilities and now are trying to cut labor expenses in response to the pandemic, with 7 U.S. plants closed since the coronavirus lockdowns crushed fuel demand. Unions, however, claim that shifting to less trained workers undermines long-established refinery safety standards, and takes high-paying jobs away from locals who have served the industry for decades.
Top oil exporter Saudi Arabia is expected to cut its official selling prices, OSPs, for Asia in June, tracking weakness in Middle East benchmark Dubai and demand uncertainty amid a new wave of regional COVID-19 outbreaks, a Reuters survey showed. Sources at 5 Asian refiners expected the June OSP for flagship Arab light crude to decrease by an average of 28 cents a barrel, which would become the producer's first price reduction since December last year. Their forecasts tracked a loss in benchmark cash Dubai's premiums to Dubai swaps, which weakened notably over the second half of April and ended the month at its lowest since February 24.
Next, we have the top news in metal market.
London Metal Exchange, LME, trading fees fell 17% to $263 million in the first quarter of this year compared with the same period of 2020, a results update from parent Hong Kong Exchanges and Clearing, HKEX, showed. LME trading fees dropped by $53 million, due to the 21% decrease in chargeable average daily volume of metals contracts traded in first quarter 2021, said a release posted on HKX's website last week. This was partly offset by a higher average fee per contract. Traders who use the exchange attributed the drop in volumes and revenue to the closure of Europe's last open outcry trading floor, or ring, last year due to the coronavirus pandemic, a measure not taken since World War II.
Palladium soared to a record high on Tuesday on worries over short supplies of the metal used in emissions-controlling devices in automobiles, while gold fell 1% after U.S. Treasury Secretary Janet Yellen said interest rates may need to rise. Spot palladium eased 0.2% to $2,965.35 per ounce by 12:32 p.m. Eastern Daylight Saving Time, after hitting an all-time high of $3,017.18. There are stricter pollution controls globally that we've not seen in the past, which means vehicles that were not previously required to use auto catalysts will now have to, and hence more demand, said Bart Mellick, head of commodity strategies at TD Securities. We will now look at the top news in the agricultural sector. U.S. corn futures on Tuesday topped $7 a bushel in the most active contract for the first time since 2013 on concerns about tightening global supplies. Surging prices have done little to curb robust demand for corn used to feed livestock and produce ethanol, opening the door for the market to extend gains, analysts said. There has been no demand destruction amid strong profitability for meat production, said Greg Heckman, Chief Executive Officer for Global Grains Trader Bunge Limited.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.